I want to share with you today a simple tool that a lot of you have, right in your own arsenal, right at your own disposal, and it's free to use with Ninjatrader 8. Now, if you trade supply and demand zones, you want to pay attention to this video. If you are a new viewer here on the channel, thank you for taking the time to watch today. For all my current subscribers, I'm going to be showing you this because anyone out there that uses Ninjatrader 8, again, it is free to use and it will possibly help increase your win rate if you know how to use it correctly. Before I jump into that, I also want to kind of touch base on I've been getting some emails, or not emails, but I should say comments from individuals about what they can do to help get them into, I guess, better price points or entry points. Let me tell you something. I've said this before in the past and many times over. First and foremost, spend some time watching the video content. A lot of you have questions, and I can tell that you're not really watching the video content because 9 times out of 10, any question that you have, if you spend time watching the videos, you'll find your answer, okay? What I do, okay, I'm going to say this right now. I do not take or enter the market with market orders, ever, okay? I don't click on market buy or market sell. I don't ever do that. I'm only entering my trades using the chart trader here on Ninjatrader by either entering, if I'm going long with a buy bid or buy ask, there is a difference there, or a sell bid or sell ask. The reason being, it helps eliminate the slippage, okay? Understand that. When you go to click that market order and you are very aggressive about getting into a trade, you better be almost spot on and knowing which way that market is going to go, the direction that the market is going to go in. Because if it pulls back against you and you hit market buy, okay, or market sell order, guess what? You may be a few points in drawdown immediately, okay, because the market may have already pulled back. So that's why I like to click buy bid or buy ask, or sell bid or sell ask. The reason why is because I'm placing a limit order in the market. Now there is a difference, okay? And the difference being, when I'm going long, I'd rather go buy bid because I get into a more or a better price point, more so where I want to get into the trade at, versus the market just throwing me into a trade, with all the slippage. Or if I'm wanting to get in very, very quickly and be a little bit more aggressive because the momentum's shifting real quick in the market, maybe to the upside, I go buy ask, okay? All right? If I'm trying to sell, okay, and I want to get in with a full defined limit order based on the price point I want to get into, then I'm going to sell ask. All right, if I'm very aggressive with my entry and going short because the momentum is pushing, at my zone fairly to the downside, then I'm going sell bid. I am not going in with market orders. I will say that again, okay? And you can simply do that from your dome or from the chart trader. You see where it says buy bid, buy ask, or sell bid, sell ask. Those are limit order options which you can actually click to enter or play when you're ready to get into a position, okay? Understand that this is how I execute and am able to get into defined price points, okay? A lot of people, they say, for example, they have a hard time trading from lower time frame charts, maybe the 24 range or whatever lower time from a lower base charts they're trading from, and they quickly get into a trade, and then they are immediately in a drawdown, and they can't quite understand how someone else may be getting a better price entry point or getting into a better trade at a better price point. This is how I'm telling you how I do it, okay? And then sometimes the trade may not work out. You have to understand, I've talked about it in many videos before, about cutting your losses early on. All right, before the market hits your full on stop or getting out at break even to protect your capital. Once you've done this, spent lots of times either back testing, and even when you go live, okay, and you have the experience, because experience comes from time, okay, spending time on the charts and understanding. But first and foremost, like I always talk about, you've got to get the direction right in the market. Now, let's go ahead and jump into the video in which I want to talk about really quickly. And today, and before I do this right quick, the breakdowns for today's trades that I took, okay, I'm going to go ahead and quickly show you right quick. These were 2 trades I took, one short and the second short right here. I will be breaking both of those trades down to all those that are my elite channel supporters, or if you want to become an elite channel supporter. It's a very inexpensive price point. It's only $6.99. $6.99 a month. That's all it is. And you get the tons of trade breakdown videos. That's the video content that where the substance is, where the meat and potatoes of how I trade really kind of comes together, the binding glue, because I'm breaking these setups down so you grasp and understanding what I was thinking upstairs and why I took those trades, okay, in reference to the structure of the market. Because the structure, you know, I'm looking at the higher base and a lower base chart. I've got to get what's going on in the market correct as far as me taking a trade, okay? And I talk about that in lots of videos covering market structure. That's the most important concept that you need to master right up front. And again, I will be breaking these trades down in the private community for all those individuals who are the elite channel supporter. If you want to become an elite channel supporter, the link is down in the description portion of the video. Click on the link. It's right below the Discord. If you want to join the Discord is free. Right below that is the link to become a elite channel supporter. 2 tiers are going to pop up. Make sure to choose the second one for $6.99. You get access to the trade breakdowns. You get the video playlist, and you also get a great video covering market structure. You are supporting my efforts as a content creator, and in return, I'm giving something back to you as a means of a perk or rewards through the YouTube tier membership program, okay? All right. So anyways, getting back to this video content today, what I want to say is that, first and foremost, let's look at structure. What I saw coming from yesterday's trading session and prior to, the market was making lower lows and lower highs, right? If we see that going on within the market, then we need to be able to identify, and you guys have been following the channel, know that I like to use multi-chart confluence, right? First and foremost, I got to get what's going on with the higher base chart correct first. This is the, this is what tells me the story behind the scenes. What's really going on? Should I be going long or should I be trading short? The picture has unfolded to where the market is in breaking structure to the downside, making lower lows and lower highs. As long as you are getting significant breaks of structure to the downside, where it's making continuous lower lows and lower highs, look for pullbacks to key areas of supply, okay, on your higher base charts, because the aggressive selling, we are looking to go short. All right, aggressive selling, low, lower high, breaking the low, coming down, low, lower high, breaking the low, coming down. Those are structural breaks. Then all we need to do is identify key points of structure or zones back at key areas of supply, meaning aggressive areas where the market broke structure coming to the downside. Now, what we can see taking place right here is that the market broke this area structure around about 835 when it came down here. All right, there's a low right here, 835. It pulled back, it broke structure coming lower, and then it pulled back again and broke more structure. This is aggressive area of selling. This is aggressive area of selling as well. Guys, this is what I trade each and every day, okay? Multi-chart confluence. I mark up my first chart, my higher base chart first. In this case here, because we're moving to the downside, I'm looking for plays to go back with the market to the downside, all right? Because the market is very bearish at this point here. So I'm looking for key areas on my higher base chart to mark up the chart first. This is a supply zone. It's a high probability setup with a gap attached to it. See that candle there that broke this bottom end of this bullish candle here, the wick of it? That bearish candle, nothing ever came back to it to tap the zone. So technically speaking, the zone, this is the zone right here. Okay, and the reason I'm gonna tell you why I marked this one, as well, is because these are both high probability setups with gaps or imbalances attached to them. When I speak of gaps, I mean the same thing, imbalance. All right. Now, we have to size the market up. You've got to understand one thing that's very critical. If the market is very bearish on a higher base chart, and you have two zones like this, you got to make a logical determination what makes sense. And there's tools that you can actually use that will, I'm not going to say they're going to give you it's not going to give you a 100% answer and it's kind of blatantly tell you like this is the zone you should trade from. This is the zone you should trade from. No, trading is based on probability. Okay. We never know which one of these zones that they're actually going to stop at. We're only trading the reaction or rejection. If we get it wrong, we quickly get out. Okay. Now, what you need to do in understanding trading is understand this. These are setups that they are traps that they're setting up in the market in a sense, okay? They created both of these areas, aggressive selling to the downside, and both of these are high probability setups. But you got to think in terms of what makes more logical sense, this zone or this zone. Where did the move start from coming off this swing, the last swing to the downside, the big swing, okay? Right here. Okay, and there's a swing right here, smaller swing. Now, to me, I'd rather take the trade, okay, at the upper portion or back up here, because if we look and see, once the market got down here, there are multiple gaps that need to be filled in. All right, going back to the upside. If I take my trade right here at this zone, I got to see and be also understanding what's above too. There still are gaps that need to be filled. So there's a strong possibility that they may not stop right here. They may tap this area, give you a couple points here, then pull back on you and stop you out unless you grabbed your profit quick enough. And then they're going to go up here and probably test this area here. Now, will they always do that? We do not know as traders, okay? They can come up this area right here, all right, and then reject the zone and then boom, blast to the ups. Back down to the downside without coming up here and filling the rest of these gaps here. But trust me when I say this, at some point, even if they tap this zone here and ran to the downside, at some point they've got to come up here and fill these imbalances in. All imbalances, let me say this, all imbalances within the market need to get filled. There are tools, again, that you can use even within Ninjatrader 8 that will help increase your win rate trading these areas of supply and demand, all right? Will help you better make a more wiser selection of choice when it comes to these zones. Now, I prefer to use the volume profile one tool, okay? There is a version of it in Ninjatrader 8 for anyone that uses or has a lifetime license. There's also the fib retracement tool. Now, I don't trade fibs, but you can use the Fibonacci retracement tool to basically like mark off a leg to the downside. This right here, when the market made this low here and it's pulled back to make this high right here, this was a significant leg or push to the downside. A high, a low. This is a major low resting right here, okay? So if I was to use the Fibonacci retracement tool and mark my high point right here, coming down when the market broke this area of structure right here to the downside, why is this a major low right here? Well, because when the market made this low here and pulled back, there were lows that the market made a run up, pull back, a run up, a pullback, and then it slightly broke above this area here. So there were multiple lows that the market came back down and broke. This low here, these lows here, this lows here. So this is a major low where the market made a move to the downside and broke this key area of structure right here. So I'm going to mark this as my Fibonacci tool, the 100% area, and back down here the 0% area, okay? I've talked about this in the past. When looking for opportunities to take a trade in terms of percents or areas where the market can pull back to, first, look to see what the gaps are, okay? If there were no gaps here, okay, I wouldn't even consider the zone. I would just look at this zone here, because if the market came back here, at least it's coming back to the 50% area. Now, you probably learned somewhere in the past that the 61.8 or the 76.4 or higher are kind of prime areas to really kind of focus in on. Anything above the 50% area, I would definitely be looking above the 50% area in this case here, because we have gaps that still need to be filled back to the upside. Again, the market came down, gaps here, breaking the area structure, came down, broke more structure, gaps here, but we have two zones. I would be interested on this high probability setup over this one right here, and know that the market tests this area right here, okay, that there's still a high percentage, okay, or probability that the market can still come up here. All right, even though you see it came here, reacted off the zone here. But this is where I like to, I talk about using, marking off a higher base zone and then looking on a lower base chart, like the 24 range chart, to see if there is a smaller 24 range zone on the inside of the larger 120 zone. That's part of the strategy that I like to see unfold. Not all times are we going to get that, and that's going to happen. That's when I'll wait to see if the market's going to start. Okay, if there's no 24 range smaller zone on the inside of the 120 range zone that I marked up here, both of them being supply zones, okay? All right, that's part of the strategy. If you do not fully understand the strategy, that's why I go into detail about this type of stuff over in the Elite Channel supporter group, or to the Elite Channel supporter group. For all those that want to join, again, the link is down in the description portion of the video. This is where I'll break these trades down. Today, I'll be breaking my trades down from today, and I'll be going in detail about the two setups I took, okay? All right, and let you know why I took those, surrounding the strategy in a sense, okay? And what I saw. Now, the market came back to this area here, and it rejected very nicely off the zone. Why? Because look, are there any gaps that need to be filled up here? No. How about here? Yes. How about here? Yes. It came up there and said, oh, we still need to fill imbalances going to the upside, and it came up there and eventually hit that area, and then what? Just sold off. Once it pulled up back to this area here, look at what was below you. all these imbalances or gaps back to the downside. So 9 times out of 10, if you get into a trade coming back to the downside, whether there's a nice setup where there's a smaller zone resting on the larger zone, or you have to wait for structure breaks on the 24 range chart, meaning waiting for structure to be broken back down on the 24 range chart and look for a pullback to a key area, a freshly new 24 range supply zone on the 24 range chart, then you may have to do that, okay, if there's not a smaller zone resting on the inside. The zone within the zone is basically just giving us the confluence we need. If I can catch a smaller zone on the inside of this larger zone, then that just really helps me get into more of a precise entry point, and it also gives me the confluence needed as well. The more confluence you have, the better the trade is going to work out in your favor. I talk about that in many videos. So this will be the setup right here, but using the Fibonacci tool here on Ninjatrader 8, it's free to use. All right, allow it to be your guide to some sense and help you understand. But without even using that, you can see that there were gaps here. All right, this is trying to kind of gives you more of a reference point. Oh, okay, here we're at the 50. Moving back up here, we're closer to the 76.4. This will make more sense because this right here at the 100% area is where the aggressive selling started taking place to the downside that broke this area structure. Hopefully that makes sense. Another thing that I like to do too as well is use the volume profile as a gauge, okay, as a tool. Now, I use the volume profile is from a third-party company. It's currently no longer for sale right now, or isn't currently for sale right now due to overseas sanctions. Overseas, I bought it many years ago, but I'm still able to use it today. I like to use this and look at the volume profile to kind of see. I talk about buying the lows and selling the highs, selling an area above a high volume area at a key area of supply where the market is showing weakness at, okay? All right, meaning lower areas of volume. If I'm buying the opposite of. So like right here, if I was to use, I'm going to use this and add a range profile just off of this leg to the downside right here. So let's draw from here to here, okay? And then sometimes I'll look at like the delta at price, all right? Some of you may use delta in your trading, but I don't trade using the delta. I just kind of look at it because it kind of lets you know in central points or areas where you're looking to possibly maybe take a trade at. What did the delta at volume, what did the delta look like at those zones, okay, or at those areas? Was there a lot of selling, a lot of volume? But here, as you can see, when the market got back to this area, the 50% area on this first zone right here, look, we're dead smack at a high volume area. That I don't like to do. I talk about in videos where, trying to trade it right at a high volume area, that's a no-no because the market can kind of ping pong around and you kind of get stuck in the middle of something. You never want to trade the middle of anything. So to me, it makes more sense to see back up here around the 76.4 because when the market comes back up here at this area, we're kind of into lower areas of volume. Like right here, this is a low volume node. Okay, look, when the market got right here at this zone, we're dead smack at a high volume area. Right here, we're in between a low volume area. We have these low volume nodes right here. The market likes to reject at low volume areas and either push through it fairly quickly or reject at it and come back down to a area where it's more comfortable at, which is the high volume areas, if that makes sense. So you can use these tools at your disposal to be able to gauge, or help identify or give you more confluence. Okay, these are tertiary tools, okay, that you can use again at your disposal to be able to help you in your trade. All right. Do I need to trade? Not 100%, but it does give me it raises the probability or helps me in a sense. It gives me more confluence because I always talk about the more confluence you have, the better your trade is going to work out in your favor. So bringing all this stuff together kind of helps me, decide and make a decision. Should I go short or long in certain key areas? Again, like I said, the market can come back to this area here. It rejected and came back down and filled these gaps in. I would have missed that trade, more than likely, unless I would have saw, okay, they rejected this. Then I would have paid very close attention to the 24 range to see, is it starting to break structure back down? If so, I'll wait for a pullback on the 24 range to go in the continuation with the market off the higher base chart is doing still to the downside. All right. So I'll wait to see if it's reacting here and maybe not take it immediately once it rejects this area here because I may wait to see if we get continue rejection to the downside on the 24 range because I see these gaps up here. Okay. All right. So hopefully that makes sense to you guys. I wanted to show you this, this great tool, this free tool that you guys could use. And in reference to, anyone that trading supply and demand, but it will help increase your win rate if you know how to use them correctly. All right. But again, I'm not a Fibonacci trader. I'm just simply saying that it's a good tool to use when you're looking or measuring a leg to see how far that market can pull back to certain key zones. Okay. But outside of that, that's all I got for you guys today. It's the weekend. It's the last trading day of the week. Today, like I said, to anyone who's an elite channel supporter, I will be breaking the trades down. So you have access to review those over the weekend, multiple times, whatever the case is. You have them. You can watch them as many times as you want. Anyone that wants to become an elite channel supporter, the link is down in the description portion of the video as well. But I wish everyone a fabulous weekend. If you're not a current subscriber, you're a first-time viewer, go ahead. What are you waiting for? Come on and join the community here. Join the channel. Click on the subscribe button right now. Make sure to turn your post notifications on so you do not miss any of the uploaded content here, because it's very good content. I can assure you that. And outside of that, I mean, I'd appreciate it if you guys would really take the time before I jump off here right now. Click that thumbs up button, that like button. If you found some value or some, in the content in which I actually talked about today. I kind of break things down because I want to share not only my experience as a trader, but also share how I actually trade. I know a lot of people don't go in great depth like I do, but I believe in giving back and helping people along. Is I guess a great testament to anyone's character as a person, but also it helps. By helping other individuals along, you're providing them, the seeds they need to see or help them grow. Okay, because they may have questions that you have the answers to, and just providing that information helps people out. In reality, that's what we are here for, is to help one another out. All right. But anyways, I can go into great detail and much more about that. But that's not why I'm here on this channel. My purpose here is to share with you what I do, how I do it. From my own personal experience, and it's just up to you if you want to give it a shot and give it a go or not. If it doesn't work for you, chop it up and move on. Some people won't see things eye to eye like other individuals, and there's nothing wrong with that. Okay, all right, you have your opinion, I have my opinion, tomatoes type thing. So just decide yourself, who are you going to listen to, what are you going to give a try, and at least give it a try, because you'll never know unless you give something a try, right? Okay, but outside of that, I appreciate everyone tuning in. Take care. Have a great weekend.